What is Form 8033 used for with tax treaties? Imagine you're trying to avoid paying taxes twice on the same income. That's where Form 8033 comes into play. It's a special document you file with the IRS to let them know you are claiming a benefit under a tax treaty. Tax treaties are agreements between the United States and other countries to prevent double taxation. For Asian American taxpayers, especially those with ties to countries like China, India, South Korea, or the Philippines, these treaties can be very helpful. If you earn income from both the United States and your home country, this form helps clarify how your income should be taxed. When you use a tax treaty to reduce or eliminate U.S. taxes on certain income, you need to file Form 8033. It's about making sure the IRS understands why you are not following the usual tax rules. You will need to include details about which treaty article you are using, the type of income involved, and how much income is affected. You also need to give a short explanation of why the treaty applies to your situation. This helps the IRS see that you are following the rules and not trying to hide anything. For example, if you are a U.S. resident but receive pension income from Japan, the U.S.-Japan tax treaty says that pension income is only taxed in Japan. You would fill out Form 8033 to tell the IRS about this treaty benefit. If you don't file the form, the IRS might expect you to pay U.S. tax on that pension, and you could face penalties for not reporting your treaty position. Filling out Form 8033 can be a bit technical. You need to know which treaty article applies, how much income is involved, and sometimes provide extra documents. That's why many Asian American taxpayers find it helpful to work with a tax professional who understands both U.S. tax law and the tax treaties of their home countries. Many people in this community have family, business, or investments in their countries of origin, so knowing how to properly use this form can save money and prevent mistakes. Not all tax treaty benefits requiring filing Form 8033. The IRS has specific rules about when it is necessary. Usually, you need to file the form when the treaty changes how your income is taxed compared to normal U.S. law. Common situations include claiming exemption from U.S. tax on certain foreign income, reducing withholding tax on dividends or interest, or establishing your residency status under a treaty instead of U.S. rules. For immigrant taxpayers or those with dual residency, Form 8033 is a useful tool. It helps you stay compliant while making sure you are taking advantage of the protections that tax treaties offer. Many in the Asian American community have financial lives that cross borders, so understanding how to use this form correctly can make a real difference. Proper use of this form can help you avoid paying more taxes than necessary and ensure you are following the rules. In short, Form 8833 is your official way to inform the IRS that you are claiming a tax treaty benefit. It is especially important for Asian American taxpayers with international income or residency questions. Using this form correctly can help you avoid double taxation and lower your overall tax bill. Just remember, it's important to pay attention to the rules and, if needed, get help from a tax professional to make sure everything is done right.